Despite yesterday's decline, the technology sector is about 5% off its 52-week high struck back in February. And the NASDAQ 100 is up more than 6% so far this year. Our next guest says there's still room to run in the group. Joining us to tell us what's working in tech is Gene Munster, founder and managing partner at Loup Ventures. Gene, you've got a whole list of tech stocks, some that are actually benefiting to some extent by the situation that the world finds itself in. But even among those, some you feel already reflect the positives and some don't. Can you just go over some of the ones that you think are fully valued or maybe overvalued, and then the one that you think definitely hasn't participated as much as it should?
So the fully valued ones would be Amazon, potentially Zoom, Peloton, Netflix. Joe, I think what we have to do is ask ourselves, what's going to return to normal and what will have sustained headwinds or tailwinds? So when we think about returning to normal, think about entertainment. This would be Peloton, for example, and Netflix. And then we think about the category of sustained headwinds. That could be around Google or Facebook, what's going on in advertising, some of the greater speculation or greater restrictions on advertising, some of the things that you've heard with the Department of Justice and Google, for example. And then there's the question about sustained tailwinds. And I think that if you look at companies that are really playing into e-commerce, I think wellness, 5G, all of these, the future of work, that really plays, I think, most strongly into Apple's strengths. And so I think if you take that lens of what's going to return to normal, what will have a tailwind, what will have a headwind, it really clarifies this whole pandemic trade. And if I can, Joe, just to try to zero in on what I think is the biggest opportunity for investors here, it's a well-traveled road, but I think Apple is ultimately the most upside. And the reason is that for companies to really flourish post-pandemic, you need two things. Number one is cash, and they have close to $200 billion in cash. And second is the right product roadmap to really play into those tailwind themes. And I think Apple has that. And the last piece, and one thing that has been acutely lost amongst all of this, is that valuation still does matter. And if you look at companies like Netflix, Amazon, Peloton, Zoom, all those trade at over 100 PE. And then you fast forward and look at a company like Apple that trades at a 25 PE. It is a massive gap relative to the opportunity. And so that's how I think about the pandemic and post-pandemic landscape.